Hello ladies and gentlemen, it's the Wonder Kid here. I hope you're all having a fantastic day. Guys, in today's video, I'm going to be talking about strategy and all about strategy in trading, because I do know and do hear of different traders talking about strategy and saying, hey, this strategy doesn't work, that strategy doesn't work. And they start to do this thing where they jump from strategy to strategy, trying to find the perfect strategy, but not realizing the fact that there is no perfect strategy in trading, right? There is no perfect one way of trading the markets where you have 100% win rate and you're extracting profit all the time from 100% wins. You're not going to win 100% of the time. That's the truth of trading, okay? Now, you can have strategies that do have a high win rate or a low win rate, but again, like I say, the strategy typically is not the issue. If you actually take a strategy such as an indicator-based strategy, like a moving average crossover or a Fibonacci or an RSI or stochastic, and you start to use some of these indicators, the indicators are completely fine, but as long as you actually establish binary rules around them. So I do suggest, especially if you're using an indicator-based strategy, that you have very, very strict rules to how you are actually going to trade the markets and backtest. Okay, so say for example, okay, I only trade when you have a moving average crossover of these two moving averages, and once a candlestick has passed or closed above the crossover or something like that, then you enter. Something like that. As long as it is very easily defined and it is black and white, then of course you can go take that plan, backtest it, and see if it has an edge in the market. Now, of course, once you actually backtest this across a large enough sample size, you will start to understand what is the win rate like and what is the expected profit expectancy of that strategy. Now, of course, this is very, very important. If you have a strategy that has a lower win rate, then of course you're going to be handling a lot more losses. And can you be able to handle that psychologically? Will you be able to say, okay, in the live markets, hey, I've handled there's quite a few losses here, but again, I'm fully fitting the plan and I know it has a positive profit expectancy. So you've got to tell yourself, hey, it's going to play out in the longer term. And remember this, like I say, like sometimes people do take these strategies in, these moving average crossovers or indicator based strategies, and then they say, hey, you know what, it's not working out, I'm taking too many losses, without actually backtesting it and looking at the results. The results are the main thing. I mean, how else will you prove the strategy works? It then becomes an issue of psychology, which is why we like to say is the majority of the issue in the trading game, right? Because of course you're handling money, you need to handle losses. There's a ton of things that you need to handle emotionally that are emotionally based. Now, this is one of the best things about reading pure price action, right? If you're reading the candlesticks alone, like candlesticks are price's purest form, right? It doesn't come any purer. Like it is literally the raw price where all these indicator-based strategies have been derived from, right? If you're able to read the candlesticks and just find like simple entry points such as a retest or a flag or something like this, then of course it can become very simple. But like I say, again, you will have to actually backtest it and see, number one, the strike rate. So of course the win rate, how often is it winning versus losing? And of course the profit expectancy. Like this is the main thing. So remember guys, like this is an important thing to note is that sometimes that you might feel like a strategy doesn't work for you. I also do suggest to find a strategy that you can be comfortable with in the long term. And what I mean by that is I know that a lot of traders will be watching this and are new to trading and say, hey, you know what, I want to make money quickly, so I want to scalp, right? Now that may not be the kind of lifestyle you want. You may actually want this kind of freedom of time. You may actually want to be a day to swing trader. So even though you kind of want that money now and you try and find the strategy now, I do actually highly recommend you guys actually find that kind of day/swing trading strategy and really hone your kind of skill and art in it. And therefore you will actually be able to start at this very moment to get really good at that strategy. So again, you know, that is some of the common pitfalls that I do see. Like the strategy is not typically the issue. Normally it's psychology based. It's either, hey, I don't believe this strategy works anymore, even though you may have backtested it and seen the positive profit expectancy. But like I say, the strategy is typically not the issue. It's normally the psychological part. If the strategy does provide the edge and you enjoy the way it trades in terms of time, so that say for example, if you're a scalper and you like to trade a certain session like London session, if you're happy to do that for, if not the rest of your life, in terms of, hey, I can actually see myself doing that, sitting in the morning and trading the London session, then by all means, go ahead and do that. Of course, traders do tend to change strategies one point in another because they actually they change lifestyle or they find a strategy that can give higher profit expectancy. But like I say, there are also pitfalls. So like I say, be careful of getting in that habit. That's the whole point of this video, of jumping strategy to strategy in order to find that perfect strategy, because in reality, there is no perfect strategy. You will be having to handle losses in this game. And of course, you just need to test it out with solid rules in the data, okay? And like I say, you know, one of the things is that the purest form of price is pure price action, the candlesticks themselves. If you're able to derive a kind of strategy that is based on candlesticks, it is very, very good for your psychology, because then you don't really have any arguments, right? You don't actually take your trades based on a subjective indicator. Not saying that indicators don't work. I know plenty of people that use an indicator-based strategy that are very good at executing to the plan. But again, if you are a pure price action candlestick trader, then of course you need to understand what the market is telling you. And again, it does protect your psychology from my perspective, because I know, hey, I've based this trade purely on the objective facts, okay? And like I say, this is one of the things that I actually talk about in my trading group. One of the things I talk about in my trading group and teach is pure price action, understanding how these kind of pairs move. So guys, feel free to check that out in the link in the description below. But again, this is very, very important. If we understand how a pair likes to move, what it is trying to tell you at certain points in time, then again, it's only going to benefit your trading. But like I say, the whole purpose of this video was to let you guys know, hey, be careful of that kind of habit of jumping strategy to strategy. Not only will you have, if you're trying to find that perfect strategy, you're going to find a new strategy that you have to back test a lot of data on, and then you may even do the same thing again and again. I would highly recommend you guys find a strategy that suits the lifestyle or the lifestyle that you want. For example, if you like to enjoy your time in the day, then of course find a strategy that is day trading / swing trading, okay? And start really practicing that. Create the rules, back test it as solidly as you can, absolutely honestly, no curve fitting, no saying, oh, okay, I would have been in this trade or that because it produced percentage. No, always be dead honest with yourself, because again, like we say, trading is a lonely business because you are the company, okay? So remember that, guys. Be careful of that habit. Be careful of jumping strategy to strategy. Remember, if it has an edge, keep playing it out. And of course, perseverance to the best trader in the world. Keep going, guys. Take care, guys. I hope you have a fantastic week, and I'll speak to you soon. Peace.